the Cashflow Chronicles. We are back as always with Hot Chris, the They See God, and we have a special guest tonight, Brett from Chit Chat Money. So thank you for joining us today. He is our resident expert on Nintendo. So if anything is wrong, be sure to hit him in the. No, I'm just kidding. So very excited to have Brett here. We had a guest, or sorry, we had a fan reach out to us and say, hey, this guy knows what he's talking about when it comes to Nintendo. Make sure you get him on the channel. Nintendo reported today, or maybe it was early or today, because they are on the Eastern Hemisphere time. So excited to talk about that. And then I and Chris also look at Dutch Bros, which reported today, and it was extremely, to me, well received. I don't know if the market received it as well as it should have. It's up after hours, but to me, maybe not as much as it should be. So we can kick it off either way. Chris, how are you doing? And Brett, how are you doing?
Doing well. Glad to be here.
Yeah, me too, man. I'm excited to have you on, Brett, because Nintendo is one of the most underrated IPs that we have in the world. If this was listed on the New York Stock Exchange, like fully, not as an ADR, I think they would have gotten bought up like crazy today. Overall, their IP is so strong. It's got decades and decades worth of nostalgia factor there. And there's just a new avenue of monetization that they're going to be reaching into for like movies and for other things that, it's going to provide them a nice stream of revenue going forward. And then at the same time, their video game industry, you would think that after how many years the Switch has been out, that would have slowed down, but their sales on their hardware products are still strong. So it makes you wonder, like, the magic of Nintendo is not nearly as lost as some people think, like with the modern advent of like these high powered consoles, and also on top of it, like the PC gaming, like Nintendo still stands strong.
Yeah. As someone who's owned it over the last 3-4 years, I think the stock hasn't done as well as the business results, but we're starting to see a lot of interesting things happen. We did talk about before the new live action movie that they announced today, TBD on when it'll actually come out. And yeah, the earnings report was solid. I mean, looking forward to go through the details and talk about when the potential Switch 2, or whatever you want to call it, their next generation console will come to the market, and how that could, potentially, it might impact the stock, but it'll be more of a confirmation that their business model is much more durable than a lot of, maybe Mr. Market is thinking.
So, Brett, I'm kind of curious. So before we hop into the details, you said been owning for 3 to 4 years now. As me just meeting for the first time, so I'm really excited to have you on the channel. What drove you to Nintendo? Was it the resurgence of, everything that was kind of nostalgic about the company? As Chris alluded to, I mean, I grew up, playing Super Smash Bros. I grew up playing Super Mario. Like, it's a company with, as Chris noted, decades of nostalgia factor to it. I'm curious what caused you to invest 3-4 years ago, and just kind of a little bit of background on that, and then we'll hop into the numbers because I'm excited.
Perfect. Yeah. So yeah, I'm the nostalgia factor as well. I was the core audience or the core age for the Wii, playing Wii Sports and Mario Kart Wii with that little remote control wheel they had. So there was a couple investors that we follow over at Chit Chat Money on Twitter. They posted these either investor letters or kind of investor reports on the company. One of them, I guess, if anyone's interested, is Ryan O'Connor. The other one is Todd Wenning. They both follow the company very closely. And then I kind of realized that a lot of my friends, people I know, had been buying up this new product they had called the Switch. And I said, okay, let's investigate this thing. I know it's got good brands. And then I figured out, hey, this stock is trading very, very cheaply if you believe that their profits are durable. And I kind of believe the growth story, or maybe not the growth story, but the durability story. There was a pretty cut and clear bear case that people have. And I thought the risk reward opportunity was really good, just because I think, while there's a chance that, and really the bear case is over cyclicality, there's a chance that may prove true. I think the brands are durable. The balance sheet is very, very, it has a high margin of safety, maybe too much of a margin of safety, some people would argue. And the opportunity is there. And I think the business results are showing it. But so far, the stock hasn't done that well. But I think this is one you got to exude a lot of patience with. They have a long-term mindset. I think you have to have the same long-term mindset if you're going to be an investor in this company.
What do you think about the currency effects? Like, how does that impact their profitability? Because, you know, Japanese yen, if you look at it, the last 3 years has primarily been decimated in terms of valuation. You know, usually the yen is a nice safety stock. I mean, a safety currency to be in. But because of like our higher interest monetary policy and their constant need to keep, you know, inflation, trying to keep deflation in check and trying to boost inflation on their side, that's resulted in a yen that's appreciated almost 50% in the last three years. I mean, me in particular, I'm bullish on the yen going forward. I think right now the yen, I think the Japanese central bank has pretty much said that they're going to let their long bond kind of like stretch out a little, basically yield out a little bit. And they've actually got some inflation going for them, which is helping because that now the story is actually coming to pass. And while we're actually at the crossroads of going into, I don't want to say deflation, we're in heavy levels of disinflation. And I think with the advent of AI, we might end up going into deflation. I think it's kind of like a crisscross effect that's going to happen where the yen is actually going to get stronger and the dollar is going to get weaker. What do you think about that?
That would be nice for Nintendo shareholders. Yeah, it's been a headwind the last few years. I think investors should definitely consider it. They've held up fairly well in spite of that. I don't have the exact number in front of me. I think I was reading the earnings report today. I believe, and this is relevant for, United States investors, only 40 to 50% of their overall sales are from the United States. And then the two other biggest markets are going to be Japan and kind of that East Asia region plus Europe, and it's mainly Western Europe. So, with the euro getting devalued versus the dollar and then the British pound as well, that's been a big headwind. I think it's unpredictable, yeah, and maybe if the yen does better, that'll be a tailwind for them. But I think it just shows how durable their business is. It shows how internationally diversified they are, and in spite of some of the macro effects, they're still holding up well. And I think maybe it's underrating this, the stock, as people don't kind of appreciate the pure, earnings power that's actually happening here, especially because, the stock hasn't moved much in US dollar terms. But if that reverses, if the yen headwinds reverse, or if you kind of exclude that from the stock, which I know, as a US investor, you can't really, like, if the yen depreciates, it's going to affect your returns. But if that stops, I think, the stock will do quite well, even if nothing changes.
Even with this depreciation, we've seen Nintendo stock in the last 5 years rise about 52%. Where the S&P's actually done more, but depends on the market. But more importantly, the FXY is the Japanese yen. It's a great way to track the performance of the yen. So if you look at it, yen valuations have come down, yet Nintendo's gone up. So which means that if the opposite happens, with the yen actually starts appreciating, you could probably end up seeing the value of this ADR start to climb as well. So just food for thought for other people on the other side. So some companies, because of where they operate and how they operate in terms of valuation, those things matter. So
So I do want to hop a little bit more into the total numbers. So Nintendo at the moment, $8.8 trillion yen company, right? So that in US dollars is about 58-ish billion. Curious if that is right or not. I'm just kind of looking at some back of the envelope numbers here, and then diving in closer to, the profitability of the company. It's been around for decades. Everyone knows that. Is 58 billion cheap? Is it something that is a good starting point for something that might grow in the future? And just kind of initial thoughts, and then we can maybe dive deeper into the quarterly numbers.
One thing I would add is they have a huge net cash position of, I believe, like $14 to $15 billion. So for any investor, just subtract that out because they really have no debt. And I take that out before doing any sort of valuation work. But if we look at the quarter, and I have on Koifin here, and I know it's really, you kind of have to go through the math every time with the conversions for the market cap. I have about a $49 billion market cap, but I know that might not be updated from today, and it could be up way after hours. in or trading in Japan. But if we look at the numbers, their software unit sales look good again. The big one was The Legend of Zelda, 19.5 million units, which was just momentum from last quarter. And then I thought what was interesting is that after the Mario movie released, and they had a more detailed presentation on their website, they basically said that due to the Mario movie, they saw an uplift in maybe the 5-year-old titles, the 4-year-old titles, kind of those legacy titles. They're only selling a little bit. They saw a big uplift there at about 1.3 times, 1.4 times their normal sales. And those have, since there's really no marketing left, they've already done all the research and product development. There's no incremental cost because they have their own hardware. So everything's, they don't have to pay the take rate to Steam, Xbox, PlayStation, Apple, Google, etc. It's themselves. Those have almost 100% incremental margin. So we saw the uplift there. And I think that was the big takeaway for me from the quarter, as well as a nice little boost from the Mario movie again on the non-gaming side of things.
Yeah, and one last thing before we move on to it. I just want to show you the impacts on an ADR basis. If you look at this is what this is what Nintendo has done in the last 5 years in terms of yen. So this is what the valuation of Nintendo looks like if you just did constant currency in yen. So right now they actually went from like 3,500 yen. So it's almost double. So it's almost like 100% gain if you just did it on a yen basis. So
as opposed to like the 50-60% on a US dollar basis.
Right.
Yeah.
Because of, like I said, the currency impacts. And
Right.
they also have a dividend too. So,
Yep. And they just raised the dividend. They did. I think the big takeaway for them is they always have this financial forecast, which can get a bit messy because the currency exchange. But I saw that they updated their dividend forecast for the full year by probably like 20% or so. And then they updated their software guidance, which is basically game sales, 5 million. And they are notoriously conservative about their guidance. So if they raise guidance, that means they're almost assuredly going to beat it.
yeah.
And they really, really hate not making their guidance. So I thought that was a huge sign as well, that not only is the Zelda game, which sold, is probably, past 20 million unit sales by now and is well on pace to probably do 25 million in its first 12 months. There's also the new 2D Mario game that got up to a great start. That's probably factoring to that as well. And those first party titles are the most important for them because they all sell for, $60, $70 a pop. And since it's all first party, they have no take rate, as I mentioned, paying that 30% fee to the flat platforms. They have, they generate the most profits for them.
Yeah. This may be a side question, but what was your favorite Nintendo game growing up?
It was either, like I said, it was the Wii generation. I was probably like 10 or 12 when that came out.
Okay.
And it had to be Wii Sports. That one we played all the time when we were kids. I mean, it's just got so basic, games. And stuff. That was.
Yeah, I remember when Wii Sports. I'm only 30. What am I? 32 or 33? Anyway, I'm probably not much older than you, or probably the same age. I think when Wii Sports came out, I was in like end of middle school, early high school for me, and yeah, playing Wii tennis and stuff like that. That was a lot of fun. Wii golf.
Oh, yeah.
It was. It was definitely.
Jeez, man, now y'all making me feel old.
You are old.
I Super Smash Brothers, like Nintendo 64 was the golden age in my opinion of Nintendo, man. So Super Smash Brothers, Zelda Ocarina of Time, GoldenEye. Dude, I still remember GoldenEye. We used to spend hours and hours. One of the best multiplayer first-person shooters ever. Yeah, man. Nintendo, like I used to play competitively, like just around like the neighborhood and around. I used to play with Ness, and bro, I was so annoying when I played Smash Brothers with Ness because I just used the PK Thunder and just smack myself.
Yeah,
and just
if you knew what you were doing with Ness, dude, you were unstoppable though.
Yeah,
like that's the thing. It's like
he also had his baseball bat where you can actually reflect like projectiles, which is freaking awesome too, bro. So it was good. Rampage, I remember that game too. That was another fun game, dude. Nintendo just has such great IP. Yeah.
Does, man.
That's part of the thesis. Yeah.
Yep. All right.
Yeah, I'm just looking for any
I thought that
potential.
was
I know
this one you had was interesting. Where I think part of the reason why people are a little down on the stock is, and I honestly think, yeah, the yen, as we've talked about, has had something to do with it. I think the stock would be higher if COVID didn't happen, because they had such a big boost during that year that the comps compared to that year make it look a little bit worse. But if you take that out, it just looks like linear growth on their users, software sales, and as you can see there, like all their first party titles have just been smash hits compared to their other consoles, or I don't really know what to call this one, the hybrid console handheld thing.
Mm.
But the execution has just been phenomenal. They just had it again with Tears of the Kingdom and the Mario game coming out. And I think for any investor that's trying to, what to look at over the next year, is they're eventually going to come out with the new Mario Kart, which is their number one seller.
Oh yes.
And when that comes out, they usually launch that with the new console. So I would think that will come out with an updated console. I don't know if it's just going to be an updated version of the Switch, a whole new name, or Switch 2, or just some sort of name there. They're going to release the new Mario Kart, which maybe Mario Kart 8, or excuse me, could be Mario Kart 9, whatever they call it. When that comes out, that'll be a really important factor, because that and I think we had that slide up before, it sold about 3 million copies just last quarter, or maybe through the first 6 months of their fiscal year, which that game was made 6 years ago for the previous console. And there's there's barely any more R&D to be had. They had these add-on subscriptions to go on top of it. Those are extremely profitable franchises for them, and that's going to be the most important. The new Mario Kart game will be extremely important. You just got to run do $60 times 50 million, and then see how much it costs to make a game. And you're like, oh wow, this is a huge profit driver for this company.
Yeah. So yeah, I guess this is just talking about the first 2 quarters comparatively. So you're looking at almost 800 billion yen divided by 150. It's 5 billion for 2 quarters. I mean, that's not anything to scoff at. It's 10 million-ish a year. So 10 billion-ish a year in US dollars. So if you think about it, and that's increasing year over year. So if it's truly only 50 to 60 billion dollars of a company, and it's going to be making anywhere between, let's just say, 8 to 12 billion dollars a year, it's pretty cheap from a price to earnings perspective. So that's net sales. I'm sorry, I was looking at net sales. I should be looking here. That's probably a lot better of a number then. So 270 divided by the 150, and then multiply that by 2. Okay, so that makes a little bit more sense. But even still, relatively cheap. I mean, 3.6 billion. If you just kind of take that number and double it, because it is a first half of the year number, divided by that, you're looking at.
I think I have
15-ish.
If I have their full year guidance, which for net profit, and things change because of foreign exchange, and it's been so wild the last few years. So hopefully that'll calm down as we, but it's approximately $2.8 billion in USD, and that's actually going to be down quite a bit from their high. And I think that's because they're investing in a lot of these new initiatives, as well as the upgraded hardware. So once that comes out, we should see profits be even higher before, because they've been, and again, the foreign exchange has made it look a lot worse in USD, but they've been as high as $4 or $5 billion in operating profit, which probably be a little lower in net profit to be about $4 billion. And I think that's very doable for them to average over the next 5, 7, 10 years. And you're not going to get extreme growth here, but given the valuation, enterprise value somewhere around $35-40 billion with such durable brands. I mean, you have Disney-like brands, way better balance sheet, way better industry, and maybe we can talk about the expansion into non-gaming stuff, which I know we're all excited about.
Are they doing Nintendo Land, I think, at Universal? I think there was a couple of resorts and theme parks that they wanted to use to monetize some of their IP. I read about that. I know that they have a Tokyo Nintendo Land, because one of my cousins went to went to well, my wife's cousins, I guess he's my cousin now. Him and his wife went to like a Nintendo land in Japan, and it looked fun. I was like, oh, maybe you know what? Maybe we need to make a trip out to Japan.
That'd be dope. Yeah, and
Yeah,
you
so
and the missus need to tell me about that one.
yeah. So with the theme parks, they have and actually funny enough, they just released they do these once a year. For anyone that's gonna follow Nintendo, they have a very vague maybe investor relations team. They're very secretive. We'll talk about the movie that they announced officially today that they said they've been working on for 3 to 4 years, which would have been nice for investors to know about that, but that's just how they roll. But they do one big long presentation of about 60 slides each year to kind of give a formal what their long-term strategy is. And they did update on the theme parks. So they have the Japanese one, which is the furthest along, that has the main, it's called Super Nintendo World. And they have a couple rides. It's quite small. It's in partnership with Universal, so it's a part of the theme park. It's nowhere near as big as Disneyland. You could probably think of, one of the little sections is what that would be. And then they're also building a Donkey Kong World, which is going to be open in 2024 in Tokyo. So that's going to add like double the size of that, which seems perfect for a theme park. I believe they're going to have like a DK Mountain roller coaster, and then in other areas in California, they've opened one, I believe recently. It could have been this year or maybe last year, which is another Super Nintendo World. It's kind of got the same blueprint. And then they're planning on having one in Singapore and then one in Orlando. And it's all in partnership with Universal. So they're not investing all the CapEx here, but they're going to earn a royalty fee. And that should show up in kind of their what I describe as the non-gaming revenue, but it's called the mobile IP and royalty income segment, and just kind of watch that to see how that flows through. They don't really talk about the unit economics of the partnership, so I do worry that they're not really going to make that much money from this thing, but it should help drive brand awareness. I mean, think if you have a family and, okay, you've been to Disneyland maybe, or maybe that's at your price range or something like that, or maybe your kids have fallen in love with one of the games, or you want to introduce them to a game you played 30 to 40 years ago with some of these characters that you liked when you were a kid. You take them to Super Nintendo World. They're like 6, 7, 8 years old. They fall in love with Mario. I mean, it's a perfect way to acquire new customers.
Yeah. It seems like an interesting company. I was just doing some back of the envelope math here, just based off the first half of, I guess, their fiscal year. 35% net profit margin, which is pretty astonishing, right? I mean, so to think like if they continue to digitalize, I saw that they had like Switch Online, stuff like that net margin can increase pretty quickly, coupled with all the new releases that they're going to do, the second console, stuff like that.
There's a lot of operating leverage here, and especially with each incremental sale on a big first party title is pretty much 100% margin, as I mentioned. The bigger they get, the bigger their installed base get. I think you had the slide there, their active users continue to grow. Is that if that inches higher, the operating leverage should, over time show up.
For sure. Chris, anything else to add? I have a question for Brett.
I was wondering, do they still own a part of the Nintendo, or the Pokemon company? I remember that at one. Yeah, that's another like major asset that you have, because Pokemon still till this day is still hot. And if you think about how much money the Pokemon company actually generates on just Pokemon cards, it's nuts. Like my brother-in-law loves Pokemon cards. He has a group on Facebook where basically they have like these live streams of like these pack openings and stuff. And I'm just like, bro, you're like 35. No, what is he? 30, 32? Or something like that. But
Steven's a grown-ass man, and we like he geeks out over that stuff. He was talking about some of the, I forget what it was he was telling me about them, but like some of the things that he was buying as like potential investments that, some of them do really, really well. It's like it's pretty interesting stuff. I mean, I have a crap ton of Pokemon cards. I have them all downstairs. I should bring them up. But of the original 151, I guess, because they always had Mew. They didn't include the original 150, but yeah, it's definitely something I'm pretty nostalgic about that as well. Watching the cartoon and a few other things. So
they own a comment here, for which I believe is the same person that connected us, that they own about 32% of the company. There are some theories, again, they're quite secretive. There are some theories that they maybe own 50%. And they also, both the Pokemon Company and Nintendo, invested in Niantic, which makes Pokemon Go. So they also have an interest in that, which is kind of the augmented reality mobile game company. They had a couple other ones, and Nintendo does have a partnership with them to make a bunch of other mobile games down the line, which is more of a decades-long thing. But yeah, the Pokemon Company has a very important relationship with Nintendo. I would almost think of them as the same company in some ways, where you have the mainline Pokemon games. They are exclusive to the Switch, and they're some of their top sellers. I mean, outside of Mario Kart, outside of maybe, I guess Animal Crossing was a huge hit on the Switch, mainly because of the pandemic, and maybe outside of one more thing, that's going to be the number one seller, or one, the number one franchise on the Switch. So that's an important brand they have as well.
Yeah, I like the fact that they have that connection, because what it essentially does is, if you want to have the next generation gaming console, like let's say you do get a PlayStation, you'll also probably get a Nintendo one, just because, hey, listen, I love playing Pokemon, or I love playing, these Mario games. So I've always seen this argument like, should I go Xbox or should I go PlayStation? But you never really understand that no matter the Xbox people or the PlayStation people, they all have Switches too. So it's almost like I don't know how to say it. So maybe the PlayStation is their primary, but there's always a Nintendo as a secondary, like, especially because like some of these multiplayer games, when physically like you're on, like, with them, bro, it's amazing. I don't know. I think you're right. Nintendo is just got that everlasting, what it's called, evergreen IP that you can just keep refreshing over and over, and just keep milking that profit. I mean, this is what Disney's been doing for 100 years, right?
Yeah, it's like Mickey Mouse. Yeah.
Yeah.
And the thing with Nintendo is, there's less of a risk of, as people talk with Disney today, the oversaturation of their brands and pushing them too much. In fact, people would argue that they're not doing enough.
Yeah.
They're way too patient, which can be a good thing, because I think a lot of that's actually price tiering. And like you mentioned with the consoles, the franchises are their competitive advantage at their core, because if you want to play the Mario game, you want to play the Pokemon game, you want to play the Zelda game, you're going to have to buy the whatever they call their latest hardware.
Yeah.
Very good. So before, or if you guys are finished with that, I really like that conversation. I need to do a little bit more due diligence personally on the company. It doesn't seem like it's too overpriced. It seems like it's kind of fairly valued and has some potential catalysts going on in the future. Before we hop over to Dutch Bros, I'm curious, Brett, if you could tell people a little bit about, one, you and Ryan's channel, and then two, a little bit about your portfolio and what you invest in. Because a lot of what I try to teach people, or at least coach people on, is like, invest for yourself, meaning, do what's best for you. Some people could do that with day trading. Some people could do that with just buy and hold. And so I'm curious, when people listen to you and they hear your perspective, I kind of want to see and hear what your kind of MO is. Like, who is Brett, and what kind of portfolio do you run? Is it more of like a swing trading, or is it more of like a long-term investor sort of mindset?
Yeah, so I should say we do have the podcast called Chit Chat Money with another guy named Ryan. We've been doing it for a few years now, actually probably coming up on 5 years or so. And we do a couple different show formats, but essentially we're looking at individual stocks, doing fundamental analysis. Honestly, some of that sort of discussion that we just had in Nintendo could be, similar to what we do there, but we usually pick one stock a week, and then we do research on it, and then we kind of do a report, which in jest we call a not so deep dive, which is just kind of in jest because that's such a term that everyone uses in the industry. And then we interview people on individual stocks as well, or maybe kind of a sector theme, but that's really the focus, just doing research on individual stocks and putting them in podcast format. So YouTube, Apple, Spotify, wherever, that's how it goes. But then with my investing style, I'm definitely a buy and hold concentrated, which I think works the best for me. I get a little bit like maybe cluttered. I don't know if I have too many stocks. So I'm more of a own 10 to 15 companies. I'm trying to look for a lot of companies, or maybe what you'd call the compounder types, or the high quality, looking for wide moat businesses, and then trying to put them on the watch list and buy them when they get cheap, if they ever get cheap. Then I also like to look at deep value stocks as well, stuff that's might be a smaller micro cap stock that's trading at a really, really discounted price. And I guess that's less of a buy and hold and more of a deep value approach of buying something that's at 2-3 times earnings, 0.4 times the book value, something people hate, but we'll take a small position there to kind of balance out the portfolio. And that's kind of how I roll. I like stuff like Nintendo. I like stuff like American Express, Coupon, stuff like that. So, and I guess I follow, consumer internet, consumer goods, financials, and those are probably the main ones. Yeah. So I think that sums it up.
So I'm curious. I know when I reached out to you, I talked to you specifically about Nintendo, but I kind of told you a little bit about Dutch Bros is kind of reporting on the same day. Is this at all on your radar? Or have you been to Dutch Bros? I'm just kind of curious, from your perspective, is it something that you're intrigued in? I know you said you were going to do a little DD as well before you came on.
Yeah, I made sure to. I got to say, I don't follow this company that closely, but we did look at it, I think 2 years ago. I know what the company is. Someone who lives on the West Coast. There's a lot of them around here, but I haven't been. I think. I guess I'm more of a make coffee at home guy, but
not a problem.
Ryan's actually been a lot, so maybe he would have been a better anecdotal evidence guy on here.
I
mean, the people that talk about it, they rave about it. So I mean, it's what you hear, it's what you read about. People that are their core customer do love it.
So I just to kind of get my background about it, I had never really tried it up until I think June or July this year. I was in Tennessee, and it just happened to be around when Chris kind of had mentioned it. I knew a buddy who lives on the West Coast in California. He talked to me about it, and I also knew that Ian Lepak, who does PPC Ian, his channel, he was kind of big on Dutch Bros because he's also previously a California guy as well. And so with that, it's always been on my radar, but I never really looked at it until more recently. And my MO is I mostly just do long-term investing for majority of my stuff. And more specifically, like the portfolio size has gotten to a place now where I try to just kind of park it and things that I know are going to kind of guarantee and won't lose me a lot of money. Then I have a speculative part of my portfolio, the Palantirs, Rocket Labs, stuff like that, that are getting close to, or have just gotten to profitability and kind of like cash flow break even. And so when Chris kind of brought this to my attention, probably like 4 or 5 months ago, they had just reported the second quarter earnings, and it kind of fit right up in my alley because it's like they're getting back to a place of profitability, and now they're just kind of trying to balance their CapEx and their kind of EBITDA growth to a point where, are they going to be free cash flow positive? So now they're generating positive cash. They can take, but they're growing at a pace where they need to balance that. And so I love that kind of opportunity because a lot of times people are like, these guys are going into debt in this environment. How could you, 8%, 10%, bonds are going to be in your future. And with companies like this growing, which we'll get into some of the numbers, company store operating profits, company store gross profits margins were 31%, which is huge, right? They made $265 million in revenue this quarter alone, of which I think they walked away with like $70 million in gross profit. So huge, right? And getting to a place where their net income last year, was a 1% net profit margin. Now we're getting to the 5% net profit margin. Their adjusted EBITDA margins 20%. So we're getting to the place now where you're starting to kind of way outgrow your operating expenditures. And to me, that's the place where I truly love to get involved. Rocket Lab's a little bit further behind than that, but they're going to swing into that as well, probably in the next year or two. So anyway, I've done a little bit of a soliloquy. Chris, you have any thoughts, or Brett, any thoughts before we maybe hop into some of these numbers?
I'm more of a mercenary investor where if I see value, I go to it. I will juice it. I will squeeze it to the best I can. And when it becomes too expensive, I'll leave it. and I'll look for the next opportunity. I mean, some people say that Chris is just another trader, but I've had my personal experiences with trying to be too long-term focused, in which case I've held things for too long. So, it's kind of tailored me into just being always like keeping my head on a swivel. I mean, I do have some companies that I'm bullish really, really long term, and I'll hold them forever. But for the most part, most of my portfolio is more around thematic investing, where I will see certain themes arise, and based on that, if I see like companies that are very undervalued relative to where I think the industry or that sector is going, then I'll be the first one to just buy and and wait for that thesis to play out. So like my thesis right now for the next couple of years is this reversal from inflation to disinflation to probably maybe even to some degree deflation, in which case you're going to see like the Fed start cutting rates much quicker and at a deeper further than what a lot of people are expecting. And so there's a lot of great companies with strong cash flows that have been able to basically what they did was they brought a lot of their capex forward during really low interest. So right now, if you look at their balance sheet, they look over levered. So they're just like, holy crap, it's just this company's got a lot of debt on its balance sheet. But the companies, because of their cash flows, they're able to manage. They're able to manage their debt very well. They're able to basically do some cuts here and there to make their business more efficient, and eventually all that will translate into shareholder value. So like a company that I'm looking at, well, I'm pretty heavily invested right now. Is one of them is Verizon. Verizon had this 5G cycle where they had to do a lot of capex to get spectrum rights to basically broadcast the 5G signal around. They've got a new business segment in their fixed wireless home internet that's growing relatively fast. And at the same time, they're cutting back on the capex because that entire investment cycle is kind of past them. So now a lot of that cash flow generation that they had, they're actually utilizing that additional cash flow to now do all the stuff that they need to, which is one, delever. And once they get to a point where the leverage is more maintainable, they'll be able to do other things like buy back shares, in which case it'll just be value accretive for a lot of shareholders. So, like opportunities like that is what I look for. And so right now, I was attracted to Dutch Bros when it first IPO'd, but I didn't necessarily see the value at the time. Typically, companies will IPO and there just be way too much demand and interest at the time, and people don't necessarily understand what some of the limitations could be on that. And so that over optimism is not a good time to get in. But then you will have times where things just start to form a bottom. And I think Dutch Bros has hit that point, and right now they're scaling up relatively fast. I did some on the ground DD when I was in Vegas with Matt, of course. And one of the things that I highlighted and pointed out, like when we were there, the entire like line of cars that was there for their drive-through, they're pretty much a drive-through first kind of business. They do have like open windows where you can get coffee, but there's no real places where you could sit down in most of their locations. And so they're primarily working through the drive-through. So the entire time I was just pointing out to Matt and the guys, like, look at the drive-through, look how packed it is. And every minute there were like one or two more cars coming in. So they definitely have something going on in there. Maybe they have crack cocaine in the drink that I don't know about.
Definitely the energy drink, man. That thing is so good. I every coffee drink that I've had thus far, I haven't found one that I like, but every time I go there, I'm like, I need the energy drink. I don't know what it is. I like Monster and Red Bull and stuff though. So that kind of like kick flavor, I like that. But I was interesting. You mentioned the lines. And so to me, like a big line would probably determine your way. Like, I'm not going to wait in that. But one, it's pretty quick. And actually two, the thought process was in the earnings call, I just listened to it, half an hour before we hopped on here. Christine being the new incoming CEO, was talking specifically like that's part of the allure, right? People are like, you go into Kentucky, which doesn't have Dutch Bros. It's this Western Coast coffee company that's coming into your state. And you see these lines, like people are sitting there like, what am I missing? Like, what is this thing that is causing so many lines? And so literally I've been to 2 in Tennessee. I've been to a couple in Texas, and only one of them has not had a line. But the majority of the time they do have a line. And so I'm like sitting there, I'm like, it gives me a question to like understand is the line part of the appeal? And they answered it on the call being like, yeah, we want people to kind of see that there's this brand that people are absolutely falling in love with, and the employees love working there, and we're doing really, really well with it. So we kind of want to balance that speed of getting your delivery and getting your product to you with the, hey, like we're here and we're kind of booming onto the scene. So that was kind of interesting to hear from the conference call.
Yeah. Do you think it's working like east of the Rocky Mountains? Because one of the big, I think, concerns or maybe things to watch that we looked at maybe a couple of years ago when it just went public was we didn't know how successful they could be moving east, because a lot of restaurant and drink concepts aren't national. Starbucks doesn't work in New England, Dunkin' Donuts, vice versa. Do you think, like, or anecdotally, were the lines just as strong, stuff like that? Like, I wonder if they've said anything on the call about the unit economics of stores in different regions.
The place and the state that they've attacked most recently is Texas. And so everyone keeps asking about Texas. And you also have to think Texas has like 4 major cities. You have Austin, Dallas, San Antonio, and Houston. Houston's where I'm located. And so you have these big, metropolitan areas that they're really going after. I would say they've been really strong with their kind of growth out to Texas. And it's been, I know there's 2 or 3 stores opening up in Florida. They haven't officially opened yet. There's 1 store or 2 stores in Kentucky, 1 in Tennessee, or sorry, several in Tennessee. There's probably a handful, if not 2 handfuls in Tennessee, none in Georgia as of yet, because there's 1 right on the border in Chattanooga, which is almost on your way to you, Chris, and in Georgia. And so I'm anticipating once they fill out in Chattanooga, they'll be on their way to Georgia. But I think what they're really waiting for is all the roasteries, so like all the beans and everything like that currently come from Oregon, and that's where their headquarters is. They're opening, and so I think they're kind of trying to time everything. And I'll get back to your initial question, and this is all speculation, of course, but they're opening up a 2nd roastery in Dallas. And Dallas, I think, will be what helps feed the growth and lowers the competitive, I guess, the cost aspect of it, going from kind of Texas to the East Coast. Because driving all the way from Oregon to Florida, or delivering all the way from Oregon to Florida, that's a pretty long drive. Going from Texas to Florida is a little bit easier. And so I anticipate over time, maybe in 2-3 years, they're going to open up another roastery somewhere that's advantageous on the East Coast as well, if they continue to move that way. So I have a buddy who works in lighting and construction. He sees some of these buildings going up all over. He's told me about another one in San Bernardino, California, opening up. And every time he'll just message, because I got him invested as well. He's a small starter position, and he's like, another one just opened, or is working in Florida. And he's like, another one in Tennessee, another one in Kentucky. And he just sees all these ones kind of start to build. So I think they're pleased with what they've seen. I tried it for the first time in Tennessee. I liked it in Tennessee. I've now been probably a handful of times here in Houston. We went in Vegas, and every single time, like I'm just attracted to their energy drink. In terms of their AUV unit volumes, they're staying pretty consistent, and the same store sales growth has actually continued to go up over 4% year over year, which is pretty impressive. So not only opening more stores, which now they're at 795 stores, they opened up 39 stores in this quarter alone. They've now actually gotten their unit volume still kind of going up and to the right. And so very interesting kind of discussions going on. Their company operated margins going to 31%, like I mentioned earlier. Like they're hitting on so many avenues at the moment. This is 265 in terms of the revenue for the quarter. I was expecting 258. I hit the store number right on the head. I hit 794. In their written paper, they say 795. On the call, they said 795. Here it says 794. It's the same number to me. And they beat on revenue in my expectations. So I was expecting kind of like a 30% year over year growth, and it ended up being 33%. So I think that they're doing really, really well in that respect. Will they continue to do well? I think that that's something that remains, like you said. I mean, the Northeast is pretty heavy in Dunkin', right? And so I don't know.
Bro,
What
I
I
hate
do,
Dunkin'. I'm from the Northeast. I hate Dunkin' Donuts.
I'm not a fan of it either, dude.
I feel like Dunkin' Donuts is just burnt coffee that was filtered through a jock strap, dude. I hate Dunkin' Donuts coffee. I know that the people up here love it, like especially in Massachusetts. Like, what's his name? Sean from Invest Live. He absolutely loves Dunkin'. My wife has ruined me forever after I started drinking Starbucks. Now I just drink Starbucks. Yeah.
So
Yeah,
I think
another thing
Sorry,
I
go ahead.
saw was that this seems like, I mean, I guess I think I have the numbers here. I was just looking at it while you were talking. At the IPO, they had and this isn't a perfect thing, but people can kind of think about what the margins will be like for a restaurant company. They had a price to sales at like 7.5 right when they IPO'd, which is pretty extreme for a company that sells food. It's not going to have software like margins, and now it's fallen down to 1.7 ish, maybe just say 1.7, which seems like one of those IPO situations where the stock falls just because of the float and the post IPO stuff, and people kind of forget about it because the stock's done so poorly. But the business, at least this quarter, actually has done, like, it's doing much better than things would indicate. It's something, it's a little bit of like a pattern matching thing that I've tried to look for over the last 5 years. I've kind of noticed where the stock will go public. You think it's at an extreme valuation. You think the business is solid. Okay, 3 years from now, it might be down 60-70%, and the business is actually doing just fine. This could be definitely be one of those situations. And I think if they prove that they can go east, then there's a big reinvestment runway ahead of them, because a lot of these regions, I mean, Texas, they could probably fit 150, 200 stores. Florida, same thing almost, or maybe not as much, but
so their goal is 4,000 stores within the next 10 to 15 years or so. So early 2030s, I would anticipate that they're going to be on their way to close to 4,000 stores. They're opening about 150 a year at the moment. That's their goal for this year, is 150. The thought process that I kind of have, and it's kind of getting to the numbers. So they walked away with like 50 odd million-ish in adjusted EBITDA. So I know that doesn't take into account share-based compensation and stuff of the like. But if you start to look, and what does that mean from a price to EBITDA perspective, the company is worth about 4.3 billion or something like that right now. And so if you're talking about the 200, or I think it's like 200 to 220 adjusted EBITDA, if you just take this quarter and roll it out for 4 quarters, because they obviously have new stores, and those stores have to kind of come into the band. Let's just say that they stay flat at this 265, which is, generally speaking, once they open, they have yet to kind of go down. But, let's just be conservative. They, generally speaking, always are going up and to the right because they're opening more and more stores. But let's just say, for example, it stays at 265, and there's some seasonality and stuff like that. That's, just above $1 billion in terms of revenue coming in. They're going to earn probably 200 to 250 million in adjusted EBITDA. So if you take that, the price to EBITDA is going to be pretty close to 20, which is pretty impressive for a company that's continuing to grow this morning at the speed at which they are. And if you look, the price to net earnings is not nearly as good, but it's getting to a place where it was basically break even in terms of GAAP profitability a year ago, and has now grown to a place where, it's starting to become more reasonable. A price to earnings of 80, which is currently what it's at, is not great by any means. But I anticipate in a year's time, if it stays at the same price, it'll probably be cut in half. Right, the price to earnings will probably be closer to 40 to 50, and so I think that, in that respect, earnings is going to continue to explode. So if you're looking at a fiscal year 25 number, I think that this valuation is very cheap, and I think that with the way that they're going, especially how they've been delivering, is definitely something that if somebody wants to hold this for 10 years, I could easily see this getting to the $10 billion mark or doubling your money very easily, if not tripling or quadrupling it, depending on how well they do over the next 10 years. Chris, sorry to interrupt.
I was going to say there's, just to keep things a little lighthearted, there's actually a really funny set that I saw recently. Let's just watch it together real quick.
What's it called? Dutch Bros? You guys been there, right? Yeah, the High School Musical of coffee. Why the fuck are those nerds so happy, bro? I'm a happy dude. I'm a happy guy. I'm not like, I was just waiting for Zac Efron to cha-cha out there like, do you want a coffee? I'm like, give me my fucking coffee. Something ain't right there. That's some Scientology shit right there. Like, Chick-fil-A used to fuck with me when I go there, but I was like, no, I'm on to you guys now, bro. I'm gonna rearrange Dutch Bros every way I can, make sure it doesn't spell out like Satan's devil juice or some shit. Weirdest fucking place ever. I don't know how that's a... Am I gonna go there tomorrow? Yes, absolutely, bro. I like it because they have a cold brew there. You guys drinking the cold brew coffee? You guys know what this is? Yeah, if you guys don't know what the cold brew coffee is, it's just a type of coffee you drink when you are tired of cocaine. This stuff is goddamn beautiful. How has the FDA not shut this shit down yet? Like, here's how crazy this shit is. It's the only time I've ever had somebody who wasn't a doctor, a drug dealer, or my mom tell me how much of a dosage I should have, right? The guy at Dutch Bros is like, all right, fucking dude. And he grabs the cup. You guys think I'm kidding, bro? Go in there. He's got one piercing right there and a green mohawk. His name was Blake, right? So I swear to God, dude. So he hands me and he goes, dude. Okay, so he goes, I swear to, this is what he said. He's like, yo, I don't know what you got going on today, but I'd start with the quarter, see how you feel in about 15 minutes. Like, yo, what, is there weed in this thing, Blake? Like, what? Is this Dutch Bros or Dank Bros? What is going on right? I didn't like the fact that this little kid didn't think I could handle it. I was like, listen here, theater major, okay, bro? I think I can handle your coffee. I got so offended to the point where I actually started listing a resume. Like, you ever do that when somebody presses you of just cool shit that I've done? I was like, listen here, Blake, I don't know if you know this, but last year I went to Coachella and bought cocaine, Molly, and ecstasy off a white dude with dreadlocks and a Miley Cyrus t-shirt, okay? I drank the full thing right in front of him. Later that day, I had so much energy, I robbed my own apartment. You guys ever done that one?
Dude, Trevor Wallace is good. He's pretty funny.
Yeah. But what I wanted to highlight there was just that it's actually becoming somewhat of a cultural phenomenon, especially among like the younger crowd. So especially if you're on the West Coast, you type in Dutch Bros on TikTok or on anything, you'll see like just this outpouring of people like, hey, I got my Dutch Bros fix. And then there's also people like that document their like 50-mile drive journey to go to Dutch Bros. And I'm just like, y'all are crazy for a cup of coffee. But I don't know why it's so popular. But hey, I don't mind milking that popularity to generate some alpha. So
I would say they generally focus a little bit more on non-coffee drinks. So like they do Dutch sodas and stuff, which I have yet to try. I'm beating a dead horse here, but I do the energy drink most of the time. But I'm curious to see, it seems like they do a lot of seasonality drinks as well. So like they just had a holiday version of the energy drink. So I'm curious to see how that comes out maybe this weekend when I have an opportunity to run to it. But anyway, some thoughts.
Yeah, it seems like young people really like to work there. It's almost like, I don't know, like it's one of those jobs that you want as someone in your either late teens or 20s. And that's just, as the guy was kind of making fun of it, but they have that brand of just being exciting and playing music and stuff like that. And it's kind of works.
It's part of the culture, right? Like they talk huge about people. They like, for example, Brett, and you maybe saw this when you did your analysis 2 years ago, they only want people to open up company stores that have worked at Dutch Bros. So like me, I'm like, oh, like I would love to buy Dutch Bros. Like, let's go franchise one. You can't, right? Like I have to either quit my current job at an oil and gas company and go work there for a couple of years and be like, oh, by the way, I also have, money set aside to open up this company store. Like, let's do it. Or, it's they're big within promoting their own people, promoting their broistas, and that's kind of something that I hope doesn't fizzle out with time, because it builds that sort of culture, and it does seem like everyone's very happy to be there, and just excited to kind of just be there. So anyway, it doesn't seem like people are counting the days or counting the minutes like sometimes when I go to Starbucks. So just food for thought.
Yeah, and it seems like it's not actually competing that much with Starbucks. This Starbucks is more daily habit. This one seems to be maybe some people a daily habit, but less of that, more of a special occasion, stuff like that. And I think, yeah, the brand is very important. I think with restaurant concepts, slower growth is usually better, slower and durable growth. There's been quite a few instances, I think probably the most famous one, Subway, where if you flood the market with too many locations, you think the AUVs are strong, you think everything looks good, but then once you get to this maturity, you realize you've opened too many and the quality's gone down. So I think a solid, I forget what they said, 4,000 stores in 10 to 15 years. I mean, that's probably a good ceiling for them, and maybe opening like 100 a year, 150, 200 a year, maybe as they get bigger. I mean, the formula works. That's how a lot of these restaurant compounders start out. And if you kind of buy at the right price and you're confident that it can go nationwide, and you're confident in the margin, which seems like Dutch Bros has got some of those advantageous margins out there, just because those locations are so small, and as you mentioned, they just cycle those cars in so efficiently, sort of like a Chick-fil-A.
Yeah, I guess my thought process is like they've mentioned it a little bit, where it seems like in there's a duality to it, right? There's the piece of going from the West Coast to the East Coast. It's cheaper in terms of build costs, and also just labor costs. They talked a little bit about how California stores are currently paying about $16 an hour, and that's soon going to have to go to $20 an hour. So there's that piece of how going from West Coast to East Coast is actually showing a positive in terms of the gross margins, gross profit margins coming out. And then also there was the piece about this. They didn't talk about it much this quarter, but last quarter they highlighted very heavily about how infill somewhat eats away at some of your AUV. So like if you have one that's say 5 miles away, and like you said, you're like, hey, it's the weekend, let's go to Dutch Bros. Now you have one that's only 2.5 miles away. You're going to go to the one that's 2.5 miles away, not the one that's 5. And so technically you're eating your own competition at that point. So there's like a piece where it's like, at what point is the saturation too much? And they have a really good pinwheel around Houston, which I think is pretty interesting to see. It's like the routes that everyone from the suburbs of Houston have to go into the center of the city, maybe for like day-to-day work. And it's like, as soon as you get into Houston, it's like, that's where they're at. And sometimes they're in the suburbs themselves, but there's none in like downtown Houston. So it's like, they almost want to make it so it's like, not while you're at work, but on your way into work sort of feel. It's pretty crazy. Cause like I used to live like in downtown Houston, and I'd have to drive, like Chris said, like 10, 15 minutes just to go to the closest one. I'd probably longer, probably 20 to 25 minutes, because they're all on the outskirts of town. So it's interesting. I don't know if that's like a concept where they're like trying to go after the suburbanish market versus say the urban market. Maybe that they thought that the culture fits better with more of these suburban stores rather than the urban stores. I'm not 100% sure. Maybe it's also the fact that there's less ability to do drive-throughs in those locations, and it's all mostly drive-through versus like sit down sort of esque restaurants. Anyway, just some food for thought.
Yeah. Are there any other things you're looking at, Brett, like more recent that you want to quickly talk about?
I did mention Coupang or Coupang forget exactly how to say it, but it's the biggest e-commerce marketplace in South Korea. It's essentially the Amazon of South Korea. I know a lot of people say that for companies, but it actually truly is. I would say they did, we'll say lightly, copied some of Amazon's ideas over there, but they just reported today. So that's why it reminded me of that. I really like where the valuation is right now, and they're just dominating the South Korean market and just entered the Taiwan market and are doing quite well there. I think they're, the cash flow is looking great. Their margins are inflecting higher. And it's another example of a company that I believe it probably went public 6 months earlier than Dutch Bros, but has had a similar trajectory where, it IPO'd at what would probably be, an absurd valuation. They took advantage of the market, and the stock's down 60, 70%, maybe even more. And now people have forgotten about it. They're like, okay, I don't want to own Coupang. All the IPO sellers are out. People kind of forgot about it, but the business keeps chugging along. They're essentially building, like, they have an even better offering than Amazon in the US for these customers. If you order by 12 a.m. Or basically before 12 a.m., you get it by 7 a.m. the next day. If you're a Rocket Wow member, which is just Amazon Prime for them, and it only costs $4 a month in South Korean won. So it's an incredible value opportunity, and they're, I think dominating that market. It's a very interesting one to look at. If anyone, we did do a podcast on them on Chit Money, I believe this year, and if anyone's interested, we go through about an hour on that one. So that's one I'm really interested right now. And their headquarters, I live in Seattle, and their headquarters are technically here since it's in the United States. So I think I want to try to head to an annual meeting, even if I'm one of the only, there's only like 3 of us there, as no one actually attends those things.
That'll be interesting. Yeah. I'm more into like Mercado Libre. I think Mercado Libre is like a very same thing. South America, they're doing just like that. I think everyone is trying to copy the Amazon model, but kind of trying to regionalize the operating matrix, to like fit the demographic and the consumers. Cause I think that's the key, right? When you have an offering that has a very similar core function as something like Amazon, but you tailor it to the locals, you'll get a lot more traction. Like C Limited in South Africa, and I'm not South Africa, sorry, in Southeast Asia, and then the one in Africa is called Jumia. So the Jumia is kind of like that there too. So I think they're only in a few countries, but it's very interesting to see that people are applying what's successful and then going on from there. So. Yeah, it was great having you on. Thank you. Definitely everyone should check out Chit Chat Money. I guess Matt, you're going to put the description in the thing below.
For Chit Chat Money, is it not there? It should be.
Yeah.
I think it is. I think I scrolled down and saw it.
Good.
Everyone, you can search Chit Chat Money wherever you get your podcast, YouTube, Spotify, Apple, and we're on Twitter or X, however you want to call it, as well. So thanks for having me, guys. It was really fun talking to Nintendo.
Thanks, Brett.
Yeah, much appreciated, my friend.
All right,
talk to you soon, brother.
Take care, guys.
Take care, all.
Later.
Cheers.